For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. We're following up on our previous video, part 1, how to find big explosive trade setups. And I talked about in that first video the difference between being in the right direction versus being in a market that is about to explode and go vertical. And so coming back to we'll look at the gold setup. There's a lot of questions, emails I received after posting the first bounce trade and the high day trade yesterday in gold. Coming back to the day count and understanding 3 levels of rise and fall. But we're going to just examine this a bit closer and understand the psychology behind the setups. And then when you go to the screen, there's really some simple questions that you need to ask yourself each and every day that you're going to trade, whether you're trading, Asia, London, or New York. And some traders like to trade all 3 or whatever. My objective is to trade 1 trade a day and identify the best opportunity. And on the day itself, determine, is it a scalp or is it a sizable opportunity to scale into? And then when I am in that trade, knowing where I'm going to get out, not worried about whether or not I missed out on profits, not worried about whether or not I could have got more or I should have got more, but knowing that I locked in money, I got paid. And I tell this to traders over and over again, you better get paid. If you're in a profitable trade, you better get paid. You better get something for your time and your effort. And if you're letting trades come back and take you out after being up in a significant profit, then you need to reassess your approach to the markets, because 25 pips a day will make you 7 figures a year if you know what you're doing. It doesn't mean that you need to trade a 25 pip move, because if we zoom in and look at this little back and forth movement on gold inside here, this isn't the type of stuff I'm interested in trying to trade to get 25 pips. I'm talking about markets that are setting up for high of the day, low of the day opportunities, and day 1, day 2, day 3 opportunities for larger moves. You can look at S&P, you can look at NASDAQ. There are 750 pip moves. So coming back to identifying the opportunities. Now, coming and just looking at today's setup, I want traders to understand, looking at your being able to step back and identify peak formation low on the reversal day on the Wednesday. We talked about initial balance. If you want to go study that more, go read Dalton, read Toby Crable. The initial balance to me is the high and low of Monday, Tuesday. And those will often, one of those extremes will often hold. We'll look at today, at Tuesday on gold, they may push back into Tuesday's low for 3 pushes and a reversal by the end of the week. I have no idea. I don't try to forecast. I don't try to predict. I come to the screen when my session is, which was pretty much now 99% New York, and I'm looking for setups. And I scroll through the pairs to see which pair may be at the high of the day, low of the day, or if I'm inside on a day 2, we may be in a trend trade for a squeeze. I'm not going to counter trend the trend, so I'll look for a continuation trade. Simple as that. Reversals, trend trades, high of day, low of day opportunities. But just coming back to gold, on Wednesday we saw the peak formation. We'd break and structure peak formation reversal. 1 level, 2 levels, and 3 levels of rise. Now, on the Thursday, we saw them lock in the second 100 pip box. So coming back, Let's just slide this down. First level, they lock in the first level and move up 100 pips peak formation low in the next 100 pip box. On Monday, they lift and go higher into the upper 100 pip box. So now we're in the third level of rise. We have 100, 100, 100. So again, I'm going to repeat to the trader who didn't think 3 levels of rise is relevant. It may not be to your strategy. It is to mine. Peak formation low at the bottom of the box of the 300 pip, 3 levels of rise. Peak formation low. Higher highs, higher lows, locking in the double zeros. We come up and on the Monday, the new week, we have our high of the week at the top of the 100 pip box. The high of the week at the 100 pip box. The low of the 3 levels rising by 100 pips each day. Look where they put the new low of the day in the upper 300 pip box, which is the last level of rise. We have a peak formation that took out the high of the day, the high of the week at the end of our 12 candle window. I mentioned this yesterday. I shorted this move down in the second hour into peak formation lows. They were trapping volume above 50. They broke structure in Asia on day 2. They broke structure on the inside. This is not the break of structure on a daily level. They come up on the last level of rise into the peak formation high bull candle, which was 50 pips above our double zero box. They push up into the first level. I want to sell at the high of the day, except we have news, major news on the calendar. I want to sell at the high of the day, preferably at the high of the week, but they don't get there. What do after 3 levels of rise in the upper 100 pip box? 3 levels of rise, 25, 50, 75 to the double zeros. They push up into that level above double zeros. The news catalyst, now we have a lower break in structure. This becomes our A top for the move down. Now, obviously, the reason one trader mentioned me, he took the trade up top, which was an awesome trade. The reason that I don't trade the news is this. I can have a stop in place. I could have shorted this or gone long, whatever. I could have a stop 25 pips above or 25 pips below. On the news, though, you will be lucky to get less than a 50 pip fill. The reason is they will pull all the orders out of the market to ensure that the best fill you will get on your stop is 50 pips. So if you understand what that means is this: if you're in the wrong direction, or even if they wick, your fill, probably best case scenario, might be 35 or 40, but in most instances you will get a 50 pip hit minimum on a news release. What that means is they can give you that fill and you have no recourse. So I'm not interested in taking that trade. That's not part of my playbook. Now, it's irrelevant to me whether somebody trades that or not. The reason I don't trade it is it's just not in my playbook. There are so many other great trade opportunities. I'm not interested in trying to get into that high volatility time frame when there is a news release on the calendar, because I know that, number one, if there is a great opportunity, the first bounce trade is where I will get my opportunity to enter the trade. If it goes vertical and takes out the high of the week, the high of the day, then my next thesis is either 3 pushes for a reversal opportunity or a second hour trade. So that market could slowly collapse and break structure inside, pull back, and we can get a second hour trade, a New York Open opportunity. But again, coming back to a opportunity after the news, this 85 pip move has significant momentum, and our first target will be where that low of the reversal began, day 1, day 2, day 3. 100, 100, 100. Peak formation above the 100 pip box, peak formation below on the Wednesday before we start our 3 levels of rise. And then our day 1, day 2 high of the day. I want to sell that, but I can't. The news is on the calendar. My next best opportunity is the first bounce entry. 85 pips where I can add some size in as it's collapsing with a lot of momentum behind it, targeting the low-hanging fruit from the second and third day longs that are in the markets. So remember, each day that a daily high is broken, we have stops underneath of those daily lows. They break a high day 1. Day 1 longs, we have a break of structure on the inside. Okay, they've come back and gotten those breakout traders with the pullback with the higher low. So we have lows, higher lows. We have day 2 longs in the market, day 3 longs in the market, and all of that becomes fuel for an explosive move down, and then 3 levels of rise in the last 100 pip box into the peak formation at double zeros for a big explosive trade all the way back down. NASDAQ, S&P, and oil. I talk about major quarter levels and high of day, low of day as the significant levels that I look to trade at the session timings. Now, hindsight is where you don't have a plan. Foresight is going to the market with an if-then or if this, then that scenario. And what that means is this. Going to the screen saying, is there news or no news? Then understanding for whatever session you're trading, I may have a high of day or low of day opportunity. I may have a trend trade opportunity. And understanding that that's my thesis at my major quarter levels, day 1, day 2, day 3. The further I get along, the higher the probability of a trade setup. So, for example, day 1 longs could be an expansion of the range on day 1 Monday. So we have day 1 longs, and then our Monday comes along. I start the week from scratch. But I'm looking at the chart to see how far along am I on day 1 Monday. Do we already have day 3 longs being triggered into the market? That means I'm getting further away. I'm buying higher and higher if I'm buying the break or in a trend trade with those existing long positions. There's news on the calendar on day 2. And we have, if we zoom in closer, the NASDAQ last Wednesday formed our peak formation low at the bottom of a 1,000 pip box. I talk about 3 levels of rise. I repeat that over and over again. In this particular instrument, major quarter levels is 250, 250, 250. Now, if I bring that line across as my 3rd level of rise for the NASDAQ on day 2, and I zoom in, I have a high of day that's above that quarter level. And as I say over and over again, the high of day and the low of day take precedent. They've pushed through there. But what that means to me, I don't just blindly get and sell at that level, because that's not part of my plan. Okay, but there's money above there because that's where there are stop loss orders on short traders, breakout traders, reversal traders, whatever. But as we go further and further, I said this yesterday, we had a reset on Thursday. We have a micro trend line break at the beginning of the US window yesterday. The first thing a micro trend line break will do is have a retest of the high. So again, no break in structure. The market continued to go higher into the end of the session. We adjust our trend line. I'm not trading off of trend lines. I'm looking for breaks as a first sign. We're now on day 2, and we have, if we come back just to the reset, we have day 1 longs in on Friday, day 2 longs in on Monday, day 3 longs in on Tuesday. They make a higher high in London, and they go above that high. We have a rising trend line. This is the escalator. The market goes vertical on the news. The market goes vertical on the news after 3 levels of rise. Now, when this market breaks down, the same thesis applies for me. I want to know if there's a first bounce trade opportunity. We break through the previous day's low. They pull back after the news, 1, 2, 3, following the second 15-minute candle. So we had our news release. We're 7 minutes in, major round numbers for a follow-through first bounce trade opportunity. So again, coming back to that 15-minute chart, I want to sell the high of the week on day 2 if there's a trade setup, except that we have news on the calendar. Once this market breaks down, again, I will emphasize, so each breakout level, if we look at the daily chart, remember we talked about breakout traders have not had any heat on the daily charts all the way down into these positions. So each day that a breakout trade was taken, these traders have been in profit all the way up. And then, of course, on day 2, they take it straight up. Our third level of rise on Tuesday blows off in the direction of the trend. The low of day is the first target. The low of day. Remember, targets are where is the money. So each day they're taking traders up higher. So traders on day 1 were trying to short this. They might have got a scalp in there. Again, look at the difference between taking a day 1 short somewhere up high. There's still an opportunity there versus a first bounce catalyst trade that goes 250 pips plus. Now, some traders ask, why didn't I take NASDAQ or S&P? Why did I take gold? Again, it's like anything. I look to focus on one trade opportunity. You can look at any of the markets, really. Some days I just resonate better with certain pairs. I'm not trying to trade every move, but I am looking for opportunities at the high and the low of the week. So, 3 levels of rise, third day, news catalyst, first bounce, follow through trade for over 200 pips. 1 bar stop. If I'm wrong, I want to be stopped out right away. If it starts to move, I may add positions in, and once it breaks down, I'm going to break even. If it breaks a daily level, a session level, so each session has wherever the peak formations are, I will use those as significant levels to go to break even. But I will be looking for these for NASDAQ, oil, and gold to be moving from major quarter levels and high and low of the day levels as significant support and resistance. Spot crude, again, zooming in, we have our Thursday low of the week, our break in structure inside of the day itself. Friday becomes our day 1 longs. That is the first day that longs are triggered into the market. We have our break of structure inside. So for traders who are trading Asia and London, understanding this break of structure on the inside and a peak formation low gave them a thesis for a trend trade either in Asia or London, and then the continuation trade in the US session. What that means is that if you're trading that, don't be looking to counter trend when a market has reversed inside coming off the low of the week, because its next target will be the high of the week. High of the week, low of the week. High of the day, low of the week. Low of the day, high of the week. They put in a low of the day W formation. We'll zoom out here in a second. Day 1, so we have Thursday's our low. Friday is inside on the way back to the high of Tuesday, which is our lower high of the week. But it's also our first day now that longs are in the market. Monday is day 2 longs in the market. New week. Day 1 up on the new week, but day 2 longs. So I know that traders get confused about that. When I start the week, I start from scratch. I don't carry positions overnight. I don't carry them over the weekend. I start the week from scratch. I'm going higher on Monday, but Monday is day 3 from the low of the week, from the previous week, and day 2 longs in the market. On Tuesday, they go up to the high of the day, right before the news, CPI. So we have our major quarter level. They went through the major quarter level to put in a high of the day, and on Monday that becomes our high of the week. Initial balance. On day 2, they break structure on the inside. They take out the low of the US session. They put in a peak formation low at the major quarter level, 87.50. They proceed to go up in 1 push, 2 pushes for Europe, London, and then 1, 2, 3 pushes into the high of Monday, high of the day, for a reversal on the news itself. So some traders may have traded this short. Again, I do not trade the news. My choice. You can do whatever you want. I don't trade the news. But we have 3 pushes and a bear pin hammer, second 15-minute bar at the close. Boom, the explosive move on the news catalyst. We have our low of the day. But lo and behold, even on our 15-minute chart, we have our peak formation up on the New York Open. This candle, this bull candle, breakout candle, is our New York Open. 15 minutes false move at the open of the equity markets in a market that has capitulated vertically down on the news on day 2 from the high of the day. We have trapped volume up high. We have our pin hammer pump and dump on the 1 minute into the lower high. 1 push, 2 pushes, and 3 pushes right at the end of the hour. Right at the end of the hour, we get our railroad track engulfment reversal for a 1-bar stop. So again, understanding timing. Okay, new hour. First hour breaks down on the news. Second hour on the New York equity markets pumps up into the breakdown. 3 pushes and then reverses right at the end of the hour for the short trade opportunity. Again, if we put our major round numbers on our 1-minute chart, we can see this trade came off of 75, 3 levels of rise. Market came down 100, 100, and into the 3rd level. New York equity markets open and pump up into the breakdown. Peak formation stop hunt at 50 for the continuation down for a 200 pip move. So understanding that once this market broke down, we had a low of the day. We had all the low-hanging fruit cleared out from the 3 levels of rise. The peak formation on the New York equity market open, and then the low-hanging fruit continuation trade. And you'll notice we're in the upper 100 pip box on the 3rd level, 100 and 100 into level 1, where we've seen that market pin down to and reverse. No idea where this market could just end up going into consolidation now. Point being, as I mentioned to a trader earlier this week, he didn't think the day count mattered. He didn't think the high of the week mattered. Well, it doesn't matter to you, but it matters to me. So if you have a firm understanding, 3 levels, 3 days, an extra day, as we saw in NASDAQ and S&P, dragging traders further away. Here we're looking at the S&P. This day 1 is the low. Day 2 breaks out. We get a reset on Thursday. This long creeping trend is a gift. Not necessarily to try and get in front of the news. Again, I do not trade the news. For those traders that like to trade the news, you can have one bad mistake and that can blow out all the good work done in months. That's 1,000 pip move on the S&P in 2 minutes. 1,000 pips. But the first bounce opportunity gave traders an opportunity for over 200 pips, maybe 500 if you held on to it. That's a massive move. Carrying through on the momentum, understanding that you are up high, and all of this volume is potentially low-hanging fruit for a move back down to where it all began. That is a big money trade setup opportunity. Escalator up. Okay, I want to sell it up high for this big move. I can't. Why? Because of the news. But first bounce opportunity. Where do I get in? Well, use time compression to your advantage. When does a 15-minute bar end and when does one begin? What do I need when that new 15-minute cycle begins for me to enter a trade? I need peak formations. I talked about 1, 2, 3 on the daily charts, 15-minute charts. We can get an hourly, 3 hours in one direction. But here's our 1-minute chart, and we get at the beginning after the news in that new 15-minute cycle, 1, 2, 3 into the previous day's low, a breakout pullback, momentum, massive momentum, a lot of volume caught, a move coming off the high of the week, and low-hanging fruit for a continuation trade and understanding when to never ever counter trend a breaking down market or an exploding market vertically. When you are in a move that could continue, you do not want to be looking to try and be buying the low thinking that this is going back up. Escalator up, elevator down. Day 2, that now could end up being our high of the entire week. We may get first red day, no idea. I can't tell until I see the market trade and set up. And that may take 3 sessions. So keep it simple, traders. Identify the big money trade setups. This is where you have the potential to make huge money. Now we had a news catalyst, but we had a second entry first bounce. But we had 3 levels of rise. We had 3 days of rise and an extended move to the high of the week. Monday, Tuesday, day 1, day 2, initial balance up high for an explosive big money trade setup opportunity. Keep it simple. Focus on the best opportunities. Don't get caught trying to chase all these moves back and forth, high day, low day swings. Understand where you are at. Don't get chopped up. Focus on the best trade setups. Have a great day. May the markets go with you.